Norman Howlett here with your next 4-minute drill for traders. Let's talk about forcing a trade. Incidentally, forcing a trade is not a good thing, but let's talk about it anyway. Recently, the stock market has been climbing. In fact, in the last few months, the stock market has not even corrected more than 3 or 4% before resuming the trend and making new highs. Now, the responsible trader will view this situation with unbounded joy. A strong trend is exactly what most traders are looking for. It's what many great trading systems are based on. The stronger the trend, the more likely the trade is to win. One follows the other. Then there's the majority of traders who listen to the fearful talking heads on CNBC and CNN, wondering how long a trend can possibly last without a nice strong correction. You'll hear statements like, bull markets don't last forever, or, well, one I heard today, with the fiscal crisis coming to a head, I'd be looking for places to short this market. This is the kind of thing that you hear. All this chatter about what could be based on conjecture, as opposed to opening your eyes and viewing what is. The expression, the market climbs a wall of worry, really does say it all. You've heard the expression. As the small, inexperienced, or untrainable trader takes shots at shorting the market on any minor sell signal, looking for the big crash, the experienced, disciplined trader is buying the market on any dip and sticking to the trend. As traders get left behind the solid up move, or even worse, losing little bits and pieces trying to satisfy their ego, and be the big guy who sold the top of the market, that same trader is digging in to his or her contrarian position against the trend, figuring when the market does turn, he'll be getting short at a higher and higher level, even though he's losing along the way with all these false breakdowns. What happens is that after enough pain, they back off the market, and of course, that's when the market finally does have a deep correction or even a change in trend. You see, what's happening here is that for this ego-controlled trader, trading becomes all about him and not about what's actually going on in the market. Look, the bottom line is you should never marry a position or a direction. You can't get ego invested in any trade. Don't look to be the hero. It's my experience that taking the path of least resistance will result in winning a lot and losing a little. The trend is the trend because price direction has momentum. To stop that momentum, you need an opposing force to first slow it down, and then more opposing force to change the direction. That's asking a lot. In fact, that's just asking way too much. Go with the trend. Trade what you see, not what the talking heads are putting in your head. If you're a technical trader, all current thinking and all near-term future thinking is all in the current price. Trust the theory and then trust yourself. You are worth trusting. Okay, that's it for this edition of 4-Minute Drill for Traders. So until next week, say it with me. Stay disciplined.